welcome everybody back to the EisnerAmper Healthcare Podcast. I'm excited to touch on a subject today that we've dabbled in before in the dental industry, and I've got two exciting guests to join us today. But before we get into the podcast, I want to just remind all great listeners to sign up for or follow us on Spotify, or sign up or subscribe to us on the YouTube channel, the EisnerAmper YouTube channel. Or any other of the platforms that you use to listen to podcasts. We love to get your continued participation and to make sure you don't miss any of our future episodes as we push them out to the market. So with that, I'm pleased to welcome a guest that we've had before, Mr. Erick Cutler from the Dallas area, and now Morgan Hamon, who's a new member to the Eisner team in the Colorado market. And so welcome, gentlemen. And Morgan, maybe give a quick introduction.
Sure. Thanks for having me. Happy to be here. We joined EisnerAmper this year. My prior company, for the last 15 years, we've supported private dental practice owners exclusively with accounting and tax services. And I've got a national client base. We've got clients all 50 states. And as we were growing, the next progression in our journey was to combine with a top firm, and we're just thrilled to be with EisnerAmper as of this year.
EisnerAmper's Healthcare Services Group supports all types of healthcare providers and entrepreneurs. We help hospitals adopt AI safely with our Accelerate Healthcare AI Safely service. From strategy and compliance to cybersecurity, we safeguard your operations. Partner with EisnerAmper to achieve your goals through collaborative and innovative solutions.
And welcome. And I think the listeners today's podcast will get a really unique look at how dental practices are dealt with from an advisory and tax perspective. So Morgan's got a great story to tell. Very interesting. Erick Cutler, welcome back to the podcast.
Always great to be back. Thanks for having me.
And just for the listeners' benefit, give us a quick background.
Yeah. So, I've been in public accounting for getting close to about 30 years, but for the last 20 years, very similar to Morgan, heavily focused in healthcare, and even more specifically on the dental side of healthcare, and really getting in and really making it a mission and a goal to really get in and work with our practices from sort of, I call it an inside out model, like really getting in and understanding their industry, their practice, what they need, and then working out from there. So it's been a really great 20 years of doing that. And as Morgan can attest, we've seen a lot, and a lot of changes have happened in that industry, and it's been a lot of fun.
Yeah. Well, I think we'll delve into some of those things here in the next 20 minutes or so. And for the benefit of the audience as well, my background too I've had spent an extensive amount of time in working with dentists over my career as well. And I always try and compare the two between the physician practices and the dental practices. And oftentimes the marketplace will sort of combine them into sort of one category. But I think as Morgan, Erick, and myself can attest, that is not the case. I think what we'll get into here is sort of maybe describe a little bit of the differences between the two. And Morgan, maybe that's a good place to start is, as you've built this significant specialty practice from your firm's perspective over the several decades, just give us a little background. What led you to go down that road as far as wanting to really get into the dental practices, as Erick described, inside out?
Yeah, it's just a bit of luck and opportunity to find our way into the dental space. Quick background. I'm your atypical CPA. I took the long road. All right. So prior to being a CPA, I was a Navy pilot for a lot of years, and I flew F-18s, West Coast guy. And when you're a young guy flying jets and learning how to do that, you don't realize necessarily like all these amazing things the Navy teaches you. And one of the things is standardization. It is just incredibly important. It saves lives in the military, but in business, it makes you very, very efficient, improves accuracy, quality. But when I thought about when we started HD Accounting Group, which is essentially a startup, and we very quickly found our way in the dental space. I really connected with the doctors, and in what we got good at in the Navy was you take a lot of moving parts, a lot of complex things going on, and you can boil it down to what I kind of jokingly call the kneeboard card, right? Because when you're doing these complex briefings, you're getting ready for a mission, whether that's into Iraq or just a big exercise. You have to have all this data, but in a couple of 2-3 hours, you're going to be in the jet, and all you have is what you've written down on a kneeboard card, right? So you get really good at digesting complex data and putting it in just kind of a simple format you can actually remember when you need to. And so we decided early on, look, our dentists, you give them like a generic P&L or a balance sheet, like they don't always get that. And so we developed a deliverable that is like, comes from my background as a Navy pilot. And in this report, we've been delivering it for about 15 years now, and it's a full color dashboard style report called our practice profitability analysis. And it's the kneeboard card, right? It is what the doctor can actually read and understand, and to have very quickly have an understanding of what's happening in their practice, written in their language. And they don't have to delve into the accounting and things that they don't understand. It's not boring. It's got graphs on there to just instantly, like if they're wondering why is my profit low? Well, let me just show you this graph. Like instantly makes sense. So the whole point of this is to diagnose profitability, right? And to push that profit margin up. So that's a bit about what kind of a long answer to your question, Tony, about how we found our way into the space. But we committed early and 100% and trying to really, give that dentist something that they really pine for. When they go through that journey of practice ownership, it's, they have something in mind, right? They want to have a successful business. They want to have some control over their life. They want to build what should be an appreciating asset over time. That's only going to come together if they're making money, right? And they're profitable. And that's been our key differentiator, I think, over the years is, rather than just jump to the tax return at year end, like let's use all that data and let's use it along the way, right? And help you make as much money as you can. And then through proper tax avoidance and planning, we'll help you hang on to as much of that money. So that's been our mission over time.
Yeah, and I think I love what you said about sort of adding charts and graphs and visuals. I mean, I find doctors and dentists tend to be very visual in their learning, and charts and financial statements they get lost in it, right?
Yeah, but it's also simple. Like I'll just recall a conversation last week. Had a conversation with a doctor, and he's concerned, right, because his cash flow has gotten to a low point. He's not happy with, and he just can't wrap his head around like what's happening. Well, we have a real simple graph. It is revenue and operating expenses. Right? And if you look at his graph, he's humming along. The bottom falls out for 3 months, and then it picks up again. And I just said, hey, doctor, see this big hole in your revenue right here? Like, that's the problem, right? So is there anything systemically wrong with your practice? I don't know. Let's talk about what happened in these 3 months, and that's the answer. But the picture, I mean, trying to imagine explaining that off a P&L, or like, let's just look at the picture and it'll like instantly make sense.
Erick, I want you to tag on that just a little bit. Morgan talked about sort of doing it more frequently. So there's a periodic aspect to it, right? And you want to be able to do it where you can make change before something becomes a big trend. So, I mean, speak on that a little bit with your dental practices. How often do you get together? What sort of, how those conversations go typically, just to make sure that something that might be trending downwards doesn't become sort of paralyzing and too late.
Absolutely. So that's one of the things that I like about the deliverable that we're talking about is the fact that it doesn't take the place of actual communication, but it enhances it. Some of the big issues, the big problems with these doctors is they're busy. And that's a wonderful, and in fact, that's hard to say that's a problem. That's a beautiful thing. It's a wonderful thing. They're busy. And so it's very hard, though, to grab them and have their attention for, even if it's just an hour a month, right? So sometimes this deliverable, though, can somewhat supplement or act only for a short period of time in that place, right? To then, before you can go get to the doctor, have a physical, meeting, conversation, discussion around the deliverable and the information that's being delivered. But what I like about that is the fact that it's keeping that information, though, fresh and in front of them. It's not overwhelming. It's not having them try to interpret or decipher what, like Morgan was saying, P&Ls and balance sheets and cash flow statements. No, it's data driven. It's very visual. It's easy for them to understand, and it's also graphical, and it shows them, Tony, what you just said, trends. It can show them trends, and what I like is the fact that now what you're doing is this knee board, right, is allowing them to take this information into the cockpit, so to speak, and now they're going to apply that information with the feeling of what they're experiencing while they're in there, right? So now they're in there, they're actually in the practice, they're doing it day to day, they've got this information, and then they can start to feel like, I feel this, I feel the revenue, or I feel this. And now they've got statistical information and data that either supports it or maybe even contradicts it, right? So then that's even more of a reason why we have the conversations then to go, okay, like Morgan was saying, Doc, this is what I'm seeing. You're feeling something. Let me show you graphically, as simple as that is, let me show you graphically what you're feeling and what you're seeing. But then the regularity of it, right, allows them to actually do something about it. So when you discover a trend or something that's starting to form, you don't have to wait, 6, 8, 9 months and then realize, oh man, I wish I could have fixed that, 6 months ago. Look, there it is. Fix it, change it, do something, make a decision, or start to work towards.
Yeah. Morgan, touch on that a little bit around what are you seeing in maybe the overhead space, maybe supplies, distribution of supplies, staffing costs?
Yeah. And I think we focus this point. It's all about like profit margin, right? That's kind of where we start. Like what is the profit margin on the practice? And the first question is like, are we happy with this? So if it's a terrific profit margin, we're more like on defense, right? Like what data points can we use to corroborate, to like Erick's point, maybe we took some action, now we can validate that with some data. So like step one is like, how do we feel, right? No such thing as too much profit, I like to say, right? But definitely too much thing is not enough profit. So if profit is low, that's when we go and we diagnose, right? And when we diagnose, there's really two parts to that equation. There's the expense structure that you just mentioned, and that's the go-to. I guarantee you, if a doctor is feeling the pinch on cash flow, if they're thinking, God, my profit margin looks low, the default number one go-to assumption is my overhead's high, or am I overspending? And that may be the case. Equally impactful, and in my opinion, more often the cause is they've got a revenue issue, right? So if we look at profit margin, there's the expense structure and there's revenue. If there's a revenue problem, that will erode a profit margin quicker than anything. So that's when we have to dive in. We have to say, look, let's take a look at your AR aging. I want to look at what's the total amount of patient and insurance outstanding? How does that compare to your monthly production? I think that should be a 1-to-1 ratio. If there's a ton of old receivables, right, and they're getting older, we see large balances in like 61 to 90, they've got a collection problem at the practice, right? And what that'll do is if you're measuring all those expenses against less revenue, all the expenses will be elevated. So it's like, if I were to come up with an analogy, it's like showing the patients in the chair and you're showing them the image, and the doctor's trying to guide through there and connect the dots. I view our reports, it's almost like the image, right? And we have to like diagnose and say, look, this is the issue. You clearly have a collection issue at your practice, so we don't need to go beat up the shine rep on supplies. We don't need to hand a staff member a pink slip, right? Whoever your insurance and billing coordinator is, they may look busy, but they're not getting it done. So you just have to diagnose and really dial it in. And to Erick's point earlier, they are busy. Like they got a very finite amount of time to be CEO of their practice. So let's boil this down to 1 or 2 action items that they can focus on for the next month or 2, execute those, like actually execute them. And then we can then revisit and then measure, okay, did those have an effect?
And you just use the key word there, measure. Because if you can measure it, you can manage it.
Mm-hmm.
Hey, Morgan, from a fee schedule perspective, do you get into kind of helping doctors set their fee schedules or monitor their fee schedules on an annual basis, let's say, to make sure they're billing out the correct amounts?
That gets out of the scope of what we do, because they have to negotiate that often. If they're a PPO, they have to go negotiate those rates, and that gets. I like to say with our clients, we walk a fine line between advisory and consulting. So there's a reason I call what we do profit advising rather than profit consulting, because in our space, consulting has a very specific meaning. And so a dental consultant is actually like in the office. So they would actually help with that. If there's a collection problem because they're not billing insurance, okay, I can diagnose that, but I can't operate on the practice. I don't know how to train their staff. So to your question, Tony, we talk about that every year, every single year. I remind our clients to adjust their fee schedule. None of their costs are going down. They have to escalate that. Sometimes they don't want to for fear of how that will impact the patient base, or they think it'll be ineffectual because it doesn't change their insurance reimbursement rate. I tell them, raise it anyway and renegotiate those. Your costs are going up, right? And you have to pass that on. And if you do it every year, you can do it in smaller, manageable increments rather than, you have the conversation, hey, doc, when's the last time you raised your fees? I don't remember. Okay, that was 5 years ago. Now you're going to do this big jump. And now that really gets scary. Let's just do it. Look at it every year. So yeah, we advise them on that. I tell them you have to do it, but no, we don't get granular in setting their fees.
Yeah, and I don't want to belabor this too much, but do you see a trend, and Erick, you can look at this too, is between cash versus insurance? Is a dentist tend to maybe trend towards being cash only?
Yes. And it's a huge gut check, right? I've had multiple conversations. And so they really have to think about it, right? So if you got like 40% of your patient is on, and I won't call anyone out, but like maybe on this one particular insurance, right? And they're taking a massive write-off. You have to think about it. Like every dental practice has a finite capacity, okay? Whether that's doctor time, chairs, or both, right? And so what do you want to consume that capacity? Do you want it to be like low profit work or profit what you're worth work, right? So if you have half your practice where you're getting paid, let's say half of what you're worth, okay, it's really scary to cut that cord. Okay, but if you grow over time, you're just building yourself into a grind where you're constantly going to be, feel like you are, I think, struggling cash wise. So long story short, there's a lot of resources that can help folks navigate that process. Again, it gets outside of our scope as accountants, right? But I'll tell you this, a lot of our clients have done this. They've gone down that, and you can see it, there's a drop, but then it comes back, but they're making this, if not the same volume, they're making the same bottom line, but working less. I've never had a doctor tell me afterwards that they wish they didn't do it. But the question they'll always have for Erick and I is, if I do this, what's going to happen? What are the numbers? Like look at the data, tell me exactly what's going to happen. I say, look, we don't have that. It's impossible to mine that data point. But what I leave them with is, look, I've never had a conversation with a doctor that did that and then regretted it.
Well, and that's good preparation for you to say, expect a drop, be comfortable with it, understand that we think that trend will go back up. Erick, I wanted to just on our last topic here, maybe for today, and we'll pick some other ones up in future episodes. Just talk about sort of succession planning or ownership transition. What sort of trends are we seeing in the dental space as we see this baby boomer generation starting to retire out? What's your experience? And I'll have Morgan sort of answer it after you as well.
So like you just described, you've got the baby boomer transition, right? So there's still a lot of activity in the industry as far as transition. Now, specifically, what I'm still seeing, a lot of DSO activity, right? In fact, working with a group right now that the seller is entertaining two situations. He's entertaining a DSO as well as an individual sale. And what I'm what I'm starting to really notice, though, is that, and this seems to be kind of trending in this direction, that the seller is actually wanting to, in more cases than not, wanting to stay on a little bit longer and want to continue practicing a little bit longer than has typically been the case. Because typically it's been 6 months to a year at the most, right? That they want to spend transitioning the practice. Well, now I'm starting to see deals where they're actually saying, I would like to stay working in the practice 2-3 years at a minimum, right? And that's this is another topic we could talk hours and hours upon, right? And with all kinds of opinions and data and so forth. But a lot of times, depending on whose perspective you're looking at, that's not really always the best thing. It's great to have a transition, but that does tend to confuse the patients and the staff as to who's really running and owning the practice, right? I mean, you've got Dr. A who has owned this practice for 30 years. Dr. B just bought it, but yet Dr. A is now still there 3 years later. Whose practice is it? And so we're seeing that. And so what we're actually encouraging a lot of times is that if that is your desire, you really should probably look a little bit more, consider more heavily the DSO model, because they're definitely more accepting of having you be a long-term hire, and so I'm seeing that a lot. But there's still a lot of great activity. I mean, especially here in Texas, there's a lot of activity, and I'm seeing more activity though coming up. More practices, I feel like they're coming up for onto the market. Definitely more so than the last like two years or so. And so the M&A activity is really picking up, and it's really exciting.
And Morgan, I want you to sort of tell me your thoughts on that, and also maybe if you were advising a dentist listening to the podcast about how far out should that conversation start around transition? Do you have a rule of thumb that you like to use?
Well, for your first question, the barometer I look at in terms of just health of the private industry is just startups and first time acquisitions. A substantial part of our clientele over the years has been startup doctors doing de novo startup practices or first time acquisitions. I still see that going very strong. I've seen no slowdown. Right, we're still talking to a lot of doctors out buying practices or doing startups. So that's healthy. Like that's really good for the private dental practice industry. If we're thinking, okay, that's coming in for those looking to transition out. There's two questions you'll get every time, right? I know this. I had a call yesterday on this, right? They want to know, how do I get the most money, and how do I not pay tax on this? So then, we have to. So I tell them, look, to get the most money, and to answer your question, Tony, like there's no point too early, right? To get the most money, you first want to do what you'd want to do anyway. You want to have the maximum collections possible that your practice is capable of, and you want to do that achieving the highest margin possible, which is what you'd want for yourself, right? So you're going to make the most money. That's going to give you the higher valuation, whether it's a multiple of the sale price to a private party, or like a multiple of EBITDA, that where a DSO is going to come up with their enterprise value. You're going to want to have the highest profit margin. So you just do what you would want to do for yourself, but be very methodical and purposeful in kind of driving up those numbers if you're looking to position for sale. If they're already there, they got the Ferrari practice, maybe that's a quick turnaround. If they're struggling, it might be a couple year project, so earlier is better.
Yeah. And does geography matter in that space? If you're in a rural setting versus a city, do you notice any difference?
I get asked that all the time because we literally have clients in all 50 states. Like we're extremely spread out. And so, and I do get a question about, what's the hot areas, and I have not correlated that. That's a project I'm working on this year because we can aggregate some of that data. But, I think the practice, what happens in that practice ultimately comes down to the business owner. I don't think it's geography, and incidentally, I also don't think it's specialty. I think it's the effectiveness of that doctor as a business leader. So I don't have a geography data point for you, Tony. I think it's pretty healthy everywhere, honestly.
All right. Well, we've kind of coming up on our clock here. I don't know if there's any, we've got a few other subject matters we're going to pick up in a future podcast. Erick, any sort of final thoughts? And then Morgan, I sort of want you to end with sort of how to get in touch with you guys and what would be the best way to connect with you. But Erick, any final thoughts?
Yeah, no, actually, my final thought is actually kind of piggybacking off of what Morgan just said, not so much from the standpoint of practice transition, but from the standpoint of what you should be doing for your practice anyway, whether it's brand new, you're midway through, or we're at the end of the life cycle and we're ready to transition out, right? You really should be really managing and focusing on the trends and the productivity and the performance of this practice, right? But not all by yourself, and because again, you're from speaking to the doctor, right? You're needed chairside. You're needed to do what it is that you do. It's what you want to do as well. But neglecting the performance and the overall management, the financial management of the practice is not something that you can afford to do long term. And it's, and so again, when we get those calls, what do I need to do to make my practice look attractive? We should have started that 15 years ago, because for 15 years, you could have been reaping those benefits. But, so just having the ability to manage and to financially run your practice the way it should be, putting cash flow at the top, driving revenue. I love that what Morgan said earlier about, sometimes expenses are the problem. You don't neglect looking at expenses, but so often we don't focus on the very top of the income statement, right? And it's in its name, the income statement. What's coming in? How fast? So to me, that's one of the big things that I really encourage, and talk to your professionals,
Well said. Well, Morgan, I think you've got a very unique offering here to the dental space. And I'm glad we had a chance on the podcast here to learn a little bit about that. But if folks want to know more and maybe touch base with you and or Erick, sort of what's the best way to get in touch?
Well, if folks want to check us out, they want to see what those reports look like I've been talking about, they can go to eagdentaladvisors.com and they can see it all. And we'll talk about how that works. If they want to schedule a time, there's plenty of opportunities on the site to do that. Just realize we like to keep it very personal. All right. If anyone clicks the button, start a conversation, those come to me. All right, and that's all done at the partner level. And we'd love to get to know the doctor and their practice and see if we could be a good fit to support them in ownership. But I tell you, it's exciting times right now because there's a lot of expertise that we've developed over the years. There's a lot of expertise that Erick and the healthcare group have built up and developed over the years. And now we get to work together, right? And we get to combine and improve and learn from each other. So it's really exciting times here at EisnerAmper in the dental space.
Completely agree.
Well, I couldn't have said it any better. So I want to thank Morgan and Erick for your time today, gentlemen.
All right. Well, thank you for having us. Enjoyed it.
Well, that wraps up our this dental episode for the EisnerAmper Healthcare Podcast. And again, thanks for listening. Reminder to follow us on the Spotify or Apple Store, wherever you get your podcasts, as well as subscribe to the EisnerAmper YouTube channel. And you'll get some additional great content as it comes out to the marketplace. So again, I want to thank Morgan, Erick, for your time today. And until we see you next time, be well.